Hey everyone, welcome back to the channel. Today, we're diving into one of the hottest topics in investing right now, ETFs, and especially, the rise of crypto ETFs. If you've been watching the US markets lately, you've probably noticed a flood of new ETFs being launched, from artificial intelligence and green energy funds, all the way to Bitcoin and Ethereum ETFs. But what exactly is an ETF? How do they work? And why is everyone suddenly talking about crypto ETFs? Let's break it all down, simply, clearly, and with real-world examples. ETF stands for Exchange Traded Fund. Think of it as a basket of investments. It can hold stocks, bonds, commodities, or even crypto assets. You can buy or sell an ETF on the stock exchange, just like a single share of Apple or Tesla. But here's the key difference. When you buy one share of an ETF, you're actually buying a tiny piece of many different assets at once. For example, the S&P 500 ETF, ticker SPY, owns shares in all 500 companies that make up the S&P 500 index. So instead of buying 500 individual stocks, you buy one ETF and instantly get diversified exposure to the entire US market. ETFs are loved by investors because they're simple to trade, low cost compared to mutual funds, and diversified, which helps reduce risk. That's why ETFs have exploded in popularity over the last 2 decades. Today, there are thousands of ETFs listed on US exchanges, covering nearly every theme, sector, and strategy imaginable. Now let's talk about the exciting part, crypto ETFs. For years, investors who wanted exposure to Bitcoin or Ethereum had to buy the actual coins, store them in a digital wallet, manage private keys, and deal with the ups and downs of crypto exchanges. That changed when Bitcoin ETFs were finally approved by the U.S. Securities and Exchange Commission, the SEC. The first to make big headlines was BITO, the ProShares Bitcoin Strategy ETF, launched in 2021. It didn't directly hold Bitcoin, it used futures contracts, but it was a huge milestone, the first major bridge between crypto and traditional finance. Then came 2024, and the real breakthrough. The SEC approved spot Bitcoin ETFs, funds that actually hold Bitcoin as the underlying asset. That means when you buy shares of a spot Bitcoin ETF, the fund itself buys and holds real Bitcoin for you. Suddenly, investing in crypto became as easy as buying a stock from your regular brokerage account. No wallets, no private keys, no complex transfers. And just recently, Ethereum ETFs have started entering the scene too. So for investors who believe in crypto but prefer regulated, traditional investment channels, this is a game changer. So, why are crypto ETFs rising so fast right now? There are 3 big reasons. Reason 1. Institutional acceptance. Big players like BlackRock, Fidelity, and ARK Invest are now in the crypto space. Their involvement adds credibility, and opens the door for pension funds and institutions to finally participate. Reason 2. Investor demand. More and more everyday investors want to diversify beyond stocks and bonds, but still invest through safe, regulated structures like ETFs. Reason 3. Regulatory clarity. The SEC's approval gives crypto ETFs a transparent legal framework, allowing them to operate under the same protections as other ETFs. And the results? Billions of dollars have already flowed into Bitcoin ETFs since launch, and that momentum could continue, especially with Ethereum and future digital asset funds. Of course, it's not all smooth sailing. Crypto ETFs still carry volatility. If Bitcoin drops 10% in a single day, your ETF will drop right along with it. There are also management fees and sometimes tracking errors, which can slightly reduce returns compared to holding the asset directly. And let's not forget, regulation is still evolving. Governments and the SEC continue to shape how cryptocurrencies are classified and controlled. A single policy change can have a big market impact. So, always do your research, understand your risk tolerance, and never invest more than you can afford to lose. To sum it up, ETFs revolutionized how people invest in traditional markets, and now, crypto ETFs are doing the same for digital assets. They're making crypto investing accessible, regulated, and mainstream. We're witnessing the start of a new era, where Wall Street and blockchain finally come together.